What's up guys, welcome back to a new video. In this video we're going to tell you how to set up your tax structure if you're foreign national investing in US real estate. So let's go. If you're new to the channel, my name is Olaf. I have my own real estate company, Green Roads Real Estate, and we help foreign investors to buy real estate in Ohio, Columbus and Cleveland, and also in Detroit, Michigan. Just a quick disclaimer, I'm not a CPA, I'm not a certified tax advisor, so always talk to someone that has knowledge and is an expert from that field. I'm just giving advice from my personal experience, the information I gathered, and what I've heard from other people that are using, and the structure I'm using personally. So again, this is not tax advice. If you want real advice on your situation, always talk to a CPA or an international tax advisor. Okay, let's just start with the simplest version. That's just buying on your own personal name. So you buy the property on your name is on the title, there's nothing, no complication. It's the easiest way to buy a property in the United States. So because you don't have to set up anything, but you just buy under your name. But there are a lot of risks and things that can go wrong if you buy under your own name. Why? Because you're personal liable. So if you buy under your own name and something happens with a tenant, he can sue you and go after all your assets. And as you know, the United States is very sue culture. It's different than in Europe. So if you're gonna buy in your own name, take this into account. If they sue you, it will be on your personal name. So then another thing, if you want to use leverage, use a DSCR loan or a hard money loan, almost most lenders, if you're foreign national, they require you to get an LLC. So if you want to use leverage, you kind of need an LLC. If you have cash enough and you want something simple, buy on your personal name, and then maybe later transform it into an LLC if you just want to dip your toes and don't want to have a lot of operating costs. If you're an individual owner, by default, the IRS taxes 30% on your gross rental income. This is massive, of course, but there's a way to avoid this. If you fill the form IRS Section 871, your rental activity is treated as a real estate business, so you can deduct your expenses. However, your CPA needs to fill in this form, so always work with a CPA that knows how to work with foreign investors, because it's way different for them than working with US investors, right? So always when you talk to a CPA, do you have experience with foreign investors? If you're looking for one, I work with several firms that have experience with foreign investors that actually know what they're doing. So if you need one, you can always ask me and I can refer you to my partners. And there's another very big thing. If you die as a non-resident investor and you own US real estate, the US government, the IRS, can tax the estate tax. So that means your inheritance will be taxed. And that's pretty hard. And that's 40% if you're a non-US citizen. So if you're a foreign investor. And there's only an exemption of $60,000. Plus they take 40% of the total market value. Not just about the profit, but of the total market value. So if you have kids or your brother or sister that you want to pass on the property to, it's kind of very expensive. It's outrageously expensive. So if you're young like me, maybe you can think, oh, like I will think about this later because I don't have many people to give money, I don't have kids, so you can worry about it later. But if you're already in an older stage, you have kids, or you want to have everything set up correctly and you don't want to pay a lot of estate tax, then buying as an individual owner is not good. Okay, let's now jump into the next way how you can buy US real estate, and that's through an LLC. It means you personally own a US company that owns the property, not yourself as an individual. Let me tell you what the benefits are from an LLC. So if you buy it through an LLC, you buy it through a company, right? So by default, you can deduct all the expenses you make without putting an extra form or whatever. You can deduct all your expenses from day one. So this means you can deduct your property management, your travel cost, HOA fees, interest rates, all fees that are related to operate a business, maybe marketing fees, your real estate agent, everything that's related to operate your real estate business. Even you traveling to the United States, getting a hotel, getting a car, getting a flight ticket, because it's related to your real estate business. So in this way, you can have a lot of write-offs and your effective tax rate is going to be way lower because you can write off all these costs against your rental income. Then the next major benefit we already touched on before is liability. If you own through an LLC, the LLC is liable, not yourself. So if you buy multiple properties, what you usually do is you set up multiple LLCs so they cannot go off after your whole portfolio, right? Because if you have multiple LLCs and they sue you through that LLC, they can only go after what's in the property, not after your whole portfolio. your personal wealth. So this sense, you have way more protection if you set up an LLC for each specific property or for a few properties. Of course, just talk to your tax accountant, depending on how many properties you're gonna buy, how you wanna structure it. But what you usually see is that people use like a very umbrella way, having a holding company and then a lot of different LLCs that are set up in each state for the specific property in that state. Then another pro is of course the lending. As I said before, a lot of banks, lenders require you to have an LLC if you want hard money, if you want to do a refinance, if you want to have a DSCR loan, they want to see an LLC, most of the lenders. So if you want to use financing, set up an LLC. Just that's the way to do it. Without it, it's going to be very difficult. I didn't find any lenders that help foreign nationals to give hard money loans or DSCR loans if they have no LLC. So if you want to use financing and leverage, and that's of course the best way to scale up your portfolio, set up an LLC. So what's the downside of an LLC? That is, you have way more operating costs and setup fees. Think about $1,000 up to $2,000 to just setting up the LLC. Then you have your yearly tax filing, your accounting fees. Think about another $1,000 to $2,000. So first of all, to set up, it's going to cost money and your yearly fee. So if you just have one property, it's not really going to make sense because your cash flow that you make, you're going to spend on accounting fees. So if you don't need financing, I would say just buy it privately. If you just want to touch your feet wet in the US, just buy it as a private owner because it's going to save you setup costs. And also it doesn't make sense if you just want to buy one property and that's it. Don't want to expand your portfolio because your profit that you make on a year is going to go away to your accountant. Or if you only want it for depreciation, fair enough. But that's why we always advise scale up your portfolio because then your accounting fees will be divided by multiple properties. So it's going to be significantly cheaper if you have 10 properties than just one because your accounting fees maybe go slightly up, but not by that much. And then it's divided by 10 instead of just by one property. So don't think I have to pay a lot of upfront fees, a lot of yearly accounting fees. It's not worth it. It's worth it if you set up a portfolio. Then again, another major downside, if you just own the LLC straightforward in your personal name, you also have the estate tax. So if you want to avoid this, we're going to go to the next structure. But if you own the LLC just with your own personal name, you still have the same issue as owning it as an individual, the estate tax. Let's go into the next structure, how you can set it up to avoid the estate tax. So actually it's pretty easy, the next step, because you have your LLC, instead of that you own it as a private individual, you have a foreign holding company that owns the shares of the LLC. So let me explain it. You have the LLC, the foreign holding company, and you, the shareholder of the foreign holding company. So how it works, if you die, the US government won't tax any estate tax because it's a transfer of shares. It's not transfer of property, of estate. So that's why if you have an inheritance that you want to give away, you're going to build up a big portfolio, use always a foreign holding company because then you can pass it on to whoever you want. You can make them shareholder. It's just going to be way easier. You're going to pay way less tax. So the downside, of course, of having this foreign holding company is, first of all, you need to set it up. If you don't have one, it's more setup fee, more operating costs. You have two companies that are up and running. You have to pay two accountants. So this is going to cost you a lot of money if you just have one single property. Not worth it. Again, if you set up a whole portfolio, very much worth it. Maybe you already have a holding company. Then it's very easy to set up this structure, right? But just take into account, what's your objective? You want to just buy one or two properties and you just want it for yourself and you don't care about who's going to pay tax in 45, 50 years, just buy in your own name or through an LLC. But if you really want to scale something up that's going to be valued more than $1 million US, definitely have a holding company because it's just a waste of money that's just going to disappear for your heirs, right? For the people that get the inheritance. So for me, what I'm going to do, I have multiple holding companies inside Europe. So yeah, again, at this moment, for me, I just didn't want to make it complicated because first, I just want to build up the portfolio, kind of will sell it in the future or restructure it and have my Bulgarian holding company owning the shares of that LLC, because then I just have way less operating costs in the beginning. So to give a quick summary, the simplest version is buying property on your own name, but it comes with the most risk and you cannot use any leverage, and you have to pay by default the most tax. Second best option is setting up an LLC, more upfront capital, more operating costs, but easier to deduct a lot of expenses, and you can get leverage by DSCR loan or a hard money loan. Then the most optimal structure, again, a lot of upfront costs and a lot of operating costs, but no estate tax, having your LLC owned by a foreign holding company. So before you start investing in the United States, make a clear plan, what you want to achieve, what's your situation right now, how much cash do you have, how much liability you can have. Let's say you have no money, you maybe have 50,000 euros. Yeah, just put it into one property if you want to start investing in real estate and flip the deal, right? Because it doesn't make sense to set up all these huge international structures, make it overcomplicated if you've never bought any deal. Also, if you have no money, not much to take from you, right? If you just have 50,000, everything is in the property and someone sues you, what's the worst thing that can happen? There's nothing to collect, right? But if your net worth is already significant, you have a lot of real estate worldwide, you have kids and you want to set up the best structure, just get an LLC owned by a foreign holding company. So really it depends on your situation. Again, I'm not a tax advisor or a CPA, so talk with them. They will give you the best advice on your personal situation and you can make a game plan. If you want to talk about your situation with me and see what we can do, I can refer you to my partners, then check out my website greenroadsrealestate.com. I can also help you to find suitable investment properties in Ohio and Detroit, Michigan. We have access to off-market deals. We have everything from A to Z that we can help you to find a suitable investment property. So if you like this video, don't forget to subscribe, hit the like button. Thank you so much for watching, and on to the next one.